Good evening and welcome to the brand new Startup Central. I'm Nayantara Rai. The brand new Startup Central is a 60-minute show, the only kind on Indian television dedicated to, of course, startups, about entrepreneurship, technology, disruption, basically anything that has to do with the new economy. On today's edition of the Startup Central, I have a very special guest. Ladies and gentlemen, today we're going to be interviewing Rajan Anandan, the ex-India head of Google, but also a serial angel investor. He's one of the best people to interview to get insights as far as the startup world goes. What's on his radar at the moment? What does it take to get Rajan Anandan to invest? What's his checklist? What are the do's and don'ts? And also, should you, the viewers, be looking at startups as an asset class? Here's an edited excerpt of my interview with Rajan Anandan. Hello and welcome to this ET Now special. I'm Nayantara Rai. Today I have a very special guest with me who's going to be talking about startups, technology, entrepreneurship and a lot more, Rajan Anandan. Thanks Rajan for joining us here on ET Now. I know that you've had a very illustrious career. We can talk about Google, we can talk about YouTube. You're getting ready, of course, for your new journey, your new avatar. You're already a very well-known angel investor. So let's start the conversation talking about what a lot of you have dreamt about India being the next Silicon Valley. We're already at the third largest market when you talk about just the sheer number of unicorns.
Yeah, I mean, look, India today has about 20 unicorns. And the US and China, which are the largest sort of startup nations in the world, each have more than well north of 100 unicorns, right? But if you go back 5 or 6 years ago, India had no unicorns, right? In fact, just last year we added 8 new unicorns, and the first 4 months.
We doubled it, in fact.
We doubled, in fact, and the first 4 months of this year we've added 4 new unicorns, right? So that's how we got from 8 to 16 to 20. And at the current pace of innovation, right, and the current pace of scaling and founding and scaling startups in India, by 2025, India will have 100 unicorns, right? So, 2025 is 6 years away. So 6 years from now, we'll have as many unicorns as the US did 3 years ago, right? So clearly, we still have a ways to go in terms.
But we're closing the gap.
We're closing the gap, and more importantly, I don't think we should compare the Indian ecosystem with any other ecosystem in the world, because I think India will actually evolve very differently, right? Where Silicon Valley is all about technology startups. If you look at India, India will have actually unicorns in many different spaces, and the reason is because India has so much white space in so many different sectors, where in many ways the US had built out those sectors, right? You look at education, you look at logistics, you look at financial services. In all these spaces, we're going to see just a massive number of very large startups.
Tell me, Rajan Anandan, besides education, besides banking, where are you seeing that need?
No, actually, if in India you have opportunity everywhere, right? So let's take I'll tell you some very new spaces and some existing, actually digital spaces where we're seeing a lot of new innovation, right? So let's take ride hailing, right? If you'd asked me 3 years ago, I would have said Uber, Ola, game over.
Yeah.
Right? But today, actually, mobility is one of the most exciting spaces, right? Because you've got Indian entrepreneurs innovating all kinds of, all over the place, right? So for instance, Bounce, which actually has built, sort of the ride your own scooter, where you actually don't need a key to switch it on, right? There's no company like that in the world. That's a whole new model, right? You look at Rapido, which is going after the two-wheeler space, and there's a whole set of other companies, right? So even in a place like space like mobility, right, where you have 2 very large companies at this point,
there's
Ola
always
and Uber.
room to innovate.
No, there's massive room for innovation, and the reason is, by the way, there are very, very few Indians who can afford to actually take taxis. Most Indians can afford to pay 5 or 10 rupees per ride. I mean, whether it's 5 kilometers or 10 kilometers or 20 kilometers, right? And that requires innovation, right? So that's sort of one space, that's an existing space. Another one is e-commerce, right? You'd asked me a few years ago, two or three years ago, everybody said, look, you got Flipkart, you got Amazon, can anybody else compete? Boom, Nykaa, right? You have vertical commerce companies, right? Nykaa, there are 2 grocery companies. But now we're seeing a whole new wave of e-commerce companies being founded and scaling very fast. Meesho, right, which is a social selling, but now you have companies like
Facebook has invested in Meesho.
That's
the
right.
First ever investment in a startup.
That's right. Because here are new models of commerce that are evolving, right? There's a company called SimSim and Bulbul and Aconnect. These are are all social commerce companies, right? They're going to build sort of social influencer-led,
yeah.
right? No, they just launched, right? They just launched like 4 months ago, and they, you actually think it's very big. They only launched 4 months ago, right? SimSim just launched. Aconeck is about to launch. So these are large existing spaces where we will continue to see innovation, right? And the reason is, by the way, because it's still very early in India, right? I mean, the user behavior is still very early. And then when you go to sort of spaces that have massive mega galactic opportunities, right? You look at a space like healthcare. Right?
Yeah, healthcare delivery.
India simply doesn't have enough health infrastructure at any part of the health value chain, right? So whether it's devices companies like Sigtuple that will use AI, whether it's companies like Clinic, which is a very early stage startup in Bangalore that's sort of combining ultra affordable health insurance with call a doctor anytime and so on and so forth, and selling it in sort of a monthly subscription basis. So you'll see a whole set of innovation in healthcare, right? And then, you look at even areas like pollution. We live in the most polluted city in the world, right? And India really doesn't have more than a handful of startups that are trying to address pollution. My view is there's going to be hundreds of companies that are going to try to address pollution. Why? Because 9 out of the top 10 most polluted cities in the world are in India, right? At some point, we're all going to wake up and say, let's try to solve some of this stuff, right? So I actually think there's opportunities everywhere. And then there's the India to the world opportunities, right? So Freshworks is a very large business, but we're going to see many, many unicorns who are B2B companies that will target from India selling to the world.
Rajan, when we're looking at becoming the third largest market for unicorns, if I could call it that, or the third largest home for unicorns, there is one big problem, and that is of funding. Now, the Indian startup space is still primarily funded by the same bunch of global giants. Isn't that going to work out to be a problem?
No, look, I think what's important is that we continue to attract capital, right? That is willing to actually bet on Indian entrepreneurs, bet on Indian talent, bet on the Indian opportunity, right? And quite frankly, actually, if you look at where we are today in terms of the startup ecosystem and venture funding, right? We're at a whole different place from 5 years ago, right? Today, actually, you have founders who are able to raise $100 million, without too much difficulty, and then some of them are raising $1 billion, right? I mean, if you'd ask me, the first $1 billion round was Flipkart in 2014, right? But last year we had several $1 billion rounds, right? So I think, look, what's very, very important for us is that we attract global capital to help Indian entrepreneurs build large businesses. I'm actually a strong believer that, if you want to really win, you have to be the best. And the way to be the best, you should be the best everywhere, right? TCS, market cap just exceeded IBM, right? TCS is a tech company now. Yes, they're a services company, but man, what a great franchise, right? TCS wouldn't have become worth $120 billion if they didn't compete around the world, right? So if you're going to compete around the world, if you're going to win around the world, there's no harm in actually getting global capital to help us actually build these businesses.
We are talking at the start, a few days after Narendra Modi has been elected for a second term. The reason I'm asking you this is the largest investment that you have seen in e-commerce in a startup that was of course Flipkart, Walmart. Look what happened with the policy change over there. You're talking about attracting global capital. Look at the angel tax issue. It has to be asked, is there a fear, like when you see people, when angel investors, when they go out to talk to HNIs overseas, LLPs overseas, are they convinced of the India story, or is there still a fear that there is going to be some flip-flop?
Look, so I think first it's important to know that in the last 5 years, right, what we've seen in terms of government focus on startups is unprecedented, right? Whether it's Startup India, or actually much more important is the build out of the India stack, right? Aadhaar, UPI, and so on and so forth, digital locker and so on and so forth. So I think 20 years from now, we're going to look back and say one of the most transformative things that happened in India was actually the building out of the India stack, right? You look at the payment space, India is evolving in a very different way. You know why? Because it's actually an open architecture. UPI, you and I can go launch a fintech company, right, off UPI, whereas in China there were closed gardens, right? You had the WeChat sort of platform, and you have the Alipay platform. In India, it's going to be very, very open. So, and the India stack is going to lead to just massive amounts of innovation, right? So I think whether it's a 10,000 crore fund of funds that was set up by the government to promote local venture capital. I was on the advisory committee of that for several years. I mean, I think there was so much focus that the government had, and I think it's important that we keep that in mind. Now, that being said, I think it's important that we don't do things from a policy standpoint to slow down the train.
Yeah.
Right? I mean, this train, as you said, is accelerating.
I mean, look at what's happened to Walmart. I mean, Jeff Bezos and Amazon. Like, you know, there are talks about it.
No, so I think, look, for instance, angel tax was, you know, was tough, was very tough. I mean, I'm an angel investor, right? Was very tough. But I think the good thing is they took the feedback, right? And now it's sort of become much, you know, gone back to business, if you will, as angel investors. And similarly, I think, you know, with regulatory changes, we do need to be very, very careful, right? Because when companies invest large amounts of money, be they investors, be they strategic companies, be they venture capitalists, private equity firms, I think they do want a level of stability. But I must tell you, look, I am massively optimistic about that we will continue to do the right things, right? Because at the end of the day, I think it's a regime that understands what innovation can do for India, but more importantly, that India needs innovation.
Yeah.
Right? If you're going to actually provide healthcare for all, if you're going to provide financial inclusion for all, if you're going to provide clean air for all, we're going to need innovation. And that innovation is going to have to come from Indian entrepreneurs, right? So I think it's going to be very critical.
Rajan, I also want to ask you this, you know, you are an angel investor. We always talk about attracting global capital, the Alibabas, you know, SoftBanks and all of that. I want to talk to you also about startups as an asset class. Are you seeing more Indians becoming aware that startups could be an asset class, especially at a time maybe when mutual funds are not doing very well? Is this a conversation you see having, and how does one go about doing it? I think you're the best to ask this question.
Yeah, I mean, I think, look, being an angel investor is something that you want to do because you want to be in it for a very long time. And I would say passion more than money. Passion is as important.
It's easy to say that when you have the money.
No, well, if you don't have the money, you shouldn't be an angel investor. Meaning, if you don't have a lot of, you know, if you don't have disposable income, right? Because it's a very high risk asset class, right? The reality is, let's say you invest in 10 companies. One of them will be could be a huge home run. A few of them might give you 3 to 5x returns over 8 to 10 years. By the way, first of all, you can't get any money out for 5-10 years. Right? Because it takes that long to build a company. This is not the stock market where tomorrow morning you can wake up and say, I want to exit my positions, right? So first you have to actually wait for a long time. Secondly, it's pretty risky, right? If you make 10 investments, one will be a home run, maybe 2, 3, 4 might give you 3 or 5x capital, but 5 of them are going to go under. So if you actually only make 4 or 5 investments, there is some probability that all 5 of them are going to go to zero, right? So it's risky, right? And third, it's also something where you have to have a pretty deep understanding about what you're doing, right? Because you're investing in very, very early stage companies, in spaces that are new. You're really trying to make bets on talent, as well as a deep understanding of the space. So it's not like, you know, I'm buying an index fund or I'm going to invest in, you know, a large cap stock or a mid cap stock, which has a lot, you know, so many analysts following it. So I would say, you know, getting into this, viewing it as an asset class only, you probably may not want to go down the angel investor route, but rather maybe invest in funds, right? So there are a lot of Indian funds that are trying to raise capital. You should actually, if you want to become an angel investor, the best way to start is join an angel network. You know, whether it's Indian Angel Network, which has been, you know, the world's largest angel network now, or there are many other angel networks, so that you can learn, right? So if you really want to invest directly into companies, start investing with others so that you can actually learn.
That'll be like your fund manager.
Yeah, no. So angel network is where you're still investing directly as an individual, but you're investing with others, right? So you have the collective learning of others, or you invest in other funds, right? So India today has 30, 40, 50 venture capital funds that are run by Indian managers. You know, they're from here, right? And they raise capital from here. Investing in them because they're actually professionals who spend, you know, 18 hours a day, 7 days a week, making sure that they can pick the right companies, build the right companies. So I think it's an interesting time. Look, I mean, in many ways, the next 10, 15, 20 years, we're going to see unprecedented value creation, right? So think about it. We have 20 unicorns. In the next 6.5 years, we're going to have 80 new billion-dollar companies. 80 billion-dollar companies, right? So you can imagine if you happen to be an investor in one of those companies, you're actually going to make it out pretty well. Yeah, that's like a mega home run, right? That's like hitting 6 sixers in a row. I mean, so it's a big deal.
So having said that, you know, I want to talk a little bit more about this. You're expecting 80 more of such companies to come about, 100 by 2025. Having said that, you know, we also at ET Now talking about a startup toolkit. They're getting direct access to Rajan Anandan. What would your checklist be for investing in a startup?
No, I think the most important, well, first of all, you know, it depends on which stage you're investing in, right? So as an angel investor, I invest very, very early. You're the first money in. It's a small team of founders, and, you know, sometimes they've launched a product, sometimes they're pre-launch. At that point, look, the biggest bet you're making is on the team. right? So if you're two co-founders, you're trying to assess whether number one, do they have the technical skills, if it's a technical product, to actually build out this product, right? Number two, you're trying to understand, do they have a really good understanding of why this is going to work? You know, what is the user insight that they have, right? There's real insight about that, and you want to see a pretty deep level of insight. You're trying to assess, are these two founders going to be able to go at it for 10 years? Because it takes 10 years to build a great company, right? We're living in this sort of unusual period where you can see hyper growth in valuations, but the reality is you still have to build a great company. And that takes 10, 15 years. So you're trying to get, is this a team that's really determined to go for 10 years? Can they live through, a large number of near-death moments? So the biggest bet is really on the team as a very early stage investor. Okay. And then you're also looking at the space, right? You want to make sure that the broad space can actually lend itself to a very large business. So that's sort of the second thing. And third, if they've already launched, if it's a business, let's say you're building a consumer app, or you're building an offline product, or you're building a consumer product, you're trying to, if they've already launched, then you look at the metrics to say, how's the growth been, how's the engagement, how's the, for instance, customer reviews. If you have good customer reviews or not. It's a pretty important telling sign, right? If you build a consumer internet product, you look at daily active users, right? If everybody's downloading your app and nobody's using it, that's not a good sign, because it probably means they don't really care for the product. So I'd say majority of the focus on the team, but then you also look at the opportunity, make sure that the opportunity is pretty large, and then you look at sort of traction to see if they've launched, to see whether the metrics sort of make sense.
So those are the do's. What are the don'ts?
No, I think the don'ts are, look, don't start a company unless you really, want to be an entrepreneur, right? I mean, we're sort of in this era where it's sort of fashionable to be. Yeah. It is really hard, it takes 10, 15 years to build a business. You're going to go through years of very, very difficult, because nobody remembers, right? I mean, everybody thinks you're an overnight success, but most of these companies that are massive companies have been around for quite a while, right? So be an entrepreneur for the right reason, because you really want to be an entrepreneur.
So, but what is the one thing that Rajan Anandan, or a few things, would always stay away from? Because it's always good to know, okay, this works, but it's also good to know this is not going to work.
Yeah, one of the things I've learned is every time I say this is not going to work, it ends up working. So I've sort of said, look, I'm not going to say it's not going to work. But I try to, if an opportunity is not that big, right? If I can't sort of see, well, firstly, I try to stay away from, I personally don't invest, I don't stay away, but I don't invest in founders who don't want to build a big business, right? I mean, you can get a sense, right?
You want a dream.
No, I want somebody who really wants to build a big business, who really has deep insight about the problem itself, right? Somebody who's kind of spent enough time tinkering with it, has a lot of insight. But I would say, look, I mean, I don't do this, that era is over for me, because every time I say that, I don't do something, and then boom, it takes off.
Yeah. So now tell me, what has been your most profitable or your favorite investment?
Look, I love all my investments, right? Otherwise,
all little children?
No, I mean, because it's not that. You wouldn't invest in a company unless you think it's a great opportunity.
So you don't pick favorites?
Right? No, I don't. Look, I mean, I've got several unicorns in my portfolio. I have a large number of companies that are over $100 million. But look, I mean, to me, I invested in a company because I really thought this was a great entrepreneur, this founding team, this was an interesting opportunity to go after, right? And then some of them didn't work because, wrong timing, or there was some new competitor that came on board. But you look at companies like Druva, who are in the B2B. I do a lot of B2B SaaS investments, so companies like Druva and Capillary and Unifor and Innovation. I mean, these are all companies that are doing very, very well. I think on the consumer side, there's a whole bunch of them, right? But I think the important thing to keep in mind is that the most important startups from India haven't been invented yet. Because we're still early, right? Think about it. There are going to be 80 new unicorns in the next 6.5 years, which means if you fast forward to 2030 or 2035, we're talking about hundreds of new companies, right? And every year, we're seeing the level and degree of innovation increase, right? So a company that I invested in last year is called Gen Robotics. They build robots. There are about 4 million scavengers in India, right? It's actually illegal to be a scavenger, but there are 4 million of them who actually clean on, they go into manholes and clean them. Most of them don't live beyond the age of 30. So these 24-year-olds from Kerala, they launched this company, they built a robot, right? It's called the Bandicoot, where now the scavenger can actually operate the robot just goes into the manhole, uses computer vision to look at and scoops it and brings it out. Now the person doesn't need to go inside. Think about this innovation. It'll impact 4 million Indians, which means about 25 million family members who are all going to have a very different life because of this one innovation, right? And I actually think we're going to see thousands of these companies. Another very interesting company that I invested in a couple of months ago was called Nyan, N-A-Y-A-N, right? So this is a giant who's the founder, is a PhD in AI and robotics from the US. He actually used to build drones and sell them to DARPA in the US, right? The defense DARPA of the US. He wanted to actually make the world's roads safer. So he comes back to India, launches this company, and they use computer vision to actually help, catch traffic. So, if you're really passionate about, all this crazy traffic we have and making the road safer, download this app called Nyan, right? It starts, and you can just put your phone on your dash and it starts recording all the traffic violations, literally. So imagine if you had 20 million Indians who actually have this app on their smartphone. Everybody's got a smartphone now. Put it on your dash and it starts recording. Right? So all of a sudden, instead of having...
And what do you do with that information?
No, so that information gets streamed back to their servers. They actually, the computer actually uses computer vision, right? So it's like human, you can see. If you switch lanes without putting a light on, that's a violation, right? You have so many violations. So it actually captures...
But what do you do with that information?
No, that goes to the police department. It goes to police
and
they give you a ticket.
That has to be connected.
Actually, the first deal they've closed is in Dubai. Here's a startup.
We need it in India.
No, I know. They're working on that. So they're working with a couple of the states, right? But that's an amazing innovation, right?
Yeah.
Think about that. If we had, forget 10 million.
You don't have to always have that camera at the traffic light to see if you've crossed it.
No, but
so all the time
everybody's going to drive much more carefully because you're going to get so many tickets. It's not even going to be funny, right? So, and that's like a really interesting India innovation, right? These two companies, there are no comps anywhere else in the world. There is nothing like it.
Okay. Nothing,
right? So, and these are just two, right? I can go on now. I can give you 25, 30 companies that are India first that don't exist anywhere else in the world, right? And I think over the next decade or 10 or 15 years, we're going to see thousands of these companies. So, in terms of my favorite investment so far, I haven't made it yet.
It has to come.
It hasn't come yet. No, I'm going to make it. It just hasn't made. I've got so many exciting companies, but the best of India is yet to come.
Can I ask you this straight up? Is this one of the reasons why you also decided to call it quits at Google because there was so much more that had to come?
So look, I was at Google for 8 years. It's an incredible company, right? I loved every minute. Saw the internet sort of go from nothing to where it is. It's an incredible company with an amazing team. But I've been very active in the startup ecosystem for a long time. I've been as an angel investor. I've been active for
and you did that at
decades.
Google as well for India.
Yeah, while I was absolutely. And I just thought, look, as I look at the next 10 or 15 years, I think it's it's a great time to be. Now I can spend every waking moment, investing in mentoring startups and working on the whole startup ecosystem. So I thought, it was the right time, and Sequoia is a fantastic firm. So.
I'm not allowed to ask you questions on that yet, right? That's going to be the next interview. Before we start winding up, when we ran a campaign saying we were going to have you, a lot of people want to know should they reach out to you? Should it just be on Twitter? How should they do it? So is there an email address or a website?
No, so look, I think as an angel investor, right, being referred is really the best.
Is the key?
So being referred by somebody that I know. Right, so I have a large number of founders who are building companies. So being referred, get to one of them and have them look at you and get to me, right? Because I get 50 to 70 LinkedIn business plans a day today, just a day, right? So I just don't have the time to. I'm not even active on LinkedIn, right? So I'm active on Twitter. So I would say if you're trying to pitch to me, the best thing would be just to get referred.
Okay, I want to also ask you, and we also ask everyone this: what are the new apps you've discovered, your favorite apps? Like what's on your phone these days that you are addicted to or that you use a lot more?
A new app that I'm using a lot more. Well, I love Nyan. I think it's pretty cool. It's in beta, by the way, so we should not have everybody download it yet. It's a company that hasn't launched yet. But it's launched, but it's not fully ready to scale yet. I've started using. I was first investor in Danzo, which is so I've started using Danzo to get whatever I want from whether it's you want a razor blades or whether you want to so a lot of the on-demand apps. I really like that because they actually call you like when the guy's at the store to pick it up. So I actually know that he's there and I can track him where he is.
But you can do that on Swiggy stores too?
No, but Swiggy is on the restaurants, right? So
no, there's Swiggy stores for groceries and supermarkets.
Yeah, so it's
but you invested in
Danzo, so I gotta look at that. So look, I kind of I test a lot of apps as I'm looking at companies, right? So I'm just I found an astrology app that I really like.
Which one?
It's called Taraka. It's really cool. You should try it.
And Rajan, you know, we also are starting an Eat Now book club. So is there any one book that changed your life, or one recently that made you think differently? What would be on your recommendation list right now?
So look, I happen to read books about things I'm passionate about. So surprise, surprise, I'm reading a lot of books on startups. I like Reid Hoffman's books, Blitzscaling. Right? It's about how to scale companies really, really fast. So if you're a startup entrepreneur, I think if you haven't read it, you should read it. Most people, I think, have already read it. So I like that book. And then I read history. I read Indian history, because history repeats itself. It's sort of, we keep forgetting. It's always good to remind yourself, like, these things happen, so they're probably going to happen again. Yeah, so.
And with that, Rajan, I'd like to thank you for taking the time out and joining us here on ET Now.
Absolutely.
Thank
Great
you.
to see you.
And you can catch that entire interview with Rajan Anandan on social media as well. Facebook, Twitter, YouTube. Take your pick. With that, we're going to take a short commercial break, but stay tuned. On the other side, we're going to get you the latest as far as BigBasket goes. Welcome back. You're watching Startup Central. I'm Nayantara Rai. Remember, this is the brand new Startup Central, dedicated to, of course, startups, but also technology, innovation, disruption, anything that has to do with the new economy. We just had Rajan Anandan, a serial angel investor and the former Google India head, talk about how India will have at least 100 unicorns by 2025. Could BigBasket be one of them? What we can tell you is that BigBasket is looking at $1 billion of revenue in a couple of years. How's it going to achieve that? What are the new innovations that we can expect from BigBasket? Well, here's a very special report by my colleague Rahul Dyama.
Well, online grocery is seeing a lot of action, new players, the tech at play, and how Indians are also really adopting to this. I decided to come down to the fresh produce warehouse of BigBasket on the outskirts of Bengaluru. Why BigBasket? Because they did become a unicorn recently, and the focus on the business, the strategy is something that has kept them on path. And I've managed to drag Hari Menon, the CEO and co-founder of BigBasket, after a lot of persuasion to the warehouse here. Hari, thank you so much for taking out the time and joining us on ET Now. You know, Unicorn, when you started the business years back, did you see the fact that you would expand so early? Indians would take up to grocery in this way, because no one thought about online grocery kicking off in India in the way that we've sort of seen it pan out over the few years. What does the unicorn status tag really mean for BigBasket?
Actually, Rahul, unicorn really doesn't, in that sense mean too much. It's business as usual. There is no change. We're happy that we get recognized like this by the investing community, and that's all that that makes us feel good. When we started, we were obviously very, very skeptical about one category, and that's really the reason that I decided to get you here. Is this whole fresh produce and the fruits and vegetables business. How quickly will customers adopt to it? Because we were clear strategically that we will go after fruits and vegetables and the fresh business from day one. We will cover the entire city from day one, and we'll make sure that everything that we do will have a lot of fresh produce in it. So it's a very strategic piece for us, because we believe that this differentiates us completely from from anybody else. So we spent significant amount of time, and that was what we were skeptical about. All that is gone. I think people have adopted extremely well to this whole piece, and there are people buying a lot of it now.
I'll come to the bit on the fresh produce category, but the funds that you've raised, Hari, where would you be deploying them? What are the big future bets of BigBasket to not only be a pure play online grocery player, but move beyond and cater to different demands that online consumers are having across the country?
So three things, Rahul. Actually, the entire fundraise of 150 million that we've put together is primarily to do three things and achieve three things. One is that it will essentially fund growth and fund expansion of three new businesses that we've just set up. we will get a full year this year for those businesses because we set them up, towards the latter part of last year. First one being a business called BB Daily. This is our entry into the fresh produce subscription business led by Fresh Milk, and that's what we will do. Delivery happens in one slot during the day, which is 5:30 to 7:30, in the morning. People order it the previous day till the previous night till about 10 o'clock. You can also subscribe to it. You can actually order for the next 1 month and say this is what I want for the next 1 month. This we are already set up in all our 10 tier 1 cities, and we are so happy to tell you that we do close to about 80,000 orders on that business right now per day, as against close to about 200,000 orders that we do in our regular BB business which we achieved in the last 8 years. So that's what this business gives you. Second is BB Instant, which is basically our unmanned vending machines. So we are investing a lot into bringing these machines here. We plan to install about 3,000 machines. And third is the business of beauty. We are actually now expanding our personal care business to now bring in beauty. So we will bring in a lot of new products around makeup, around fragrances, around imported luxury items, and build that business out. We will have close to about 30,000 additional SKUs of products just on beauty. So that's the first investment that we are making into 3 new businesses and first application of our new money that we are bringing in. The second thing that we are going to do is invest into infrastructure and technology in a big way. Technology investments is obviously to improve customer experience and the whole experience that we are providing to customers. Infrastructure is to build out a whole host of dark stores and smaller warehouses that we're actually building across the city to essentially start getting closer to a 2-hour delivery model, and that's really what we want to achieve. And third is of course investment in customer acquisition and marketing, because we are going to double our business nearly this year, and we would get very close to becoming a $1 billion business from a sales standpoint. From an exit run rate standpoint, as on March 2020, we would be $1 billion.
A lot of headlines for us in what you've described as the focus areas. But one thing that has caught my interest is being in the business of grocery, especially fresh produce, fruits and vegetables, is a tough nut to crack. So how have you been able to do it? This massive, close to 1 lakh square foot of space is largely dedicated to fresh produce. How do you go around ensuring that the turnaround time, catering to Indian tastes, and also ensuring that the wastage is also sort of capped at the bare minimum?
I think there are 2 parts to it. I think from a consumer side, I think we've kind of understood a lot on consumer behavior around this category now. And you would be very happy to note that today fruits and vegetables contributes close to 20% to our business. The equivalent that in a physical store that you will see will be about anywhere between 5 to 7%. And that's the difference it's made. And that's because we've understood consumer requirements, consumer preferences. So what we've done is actually we've just got closer to the farmer. Close to 80% of what we sell comes directly from farmers. Just to give you a sense of numbers that this business will generate, last year this business standalone, the fruits and vegetables business itself, was close to 600 crores. This year it will be close to about 1200 crores from a business size perspective.
That's quite massive. Right?
Correct. 80% of that comes directly from farmers, and the way we've done this is essentially by setting up what are called collection centers, right, where we've gone closer to the farming locations. Today we have 38 of them. Each collection center has a strong buying and a strong quality team that grades and sorts. More importantly, it's got what are called agronomists who actually work very, very closely with farmers, gives them inputs, gives a lot of stuff back into the buying team, saying what are the harvest cycles that the farmer will go through. All this is captured in an app which we work with a company called Cropin. All farmer details are captured. And so this is what the agronomist does, actually working closely with the farmer. We work with close to about 8,000 farmers today, which in this coming year we will double. So we'll work with about 15,000 farmers. More importantly, we've set up a system where they get paid for every supply they make on day 2 directly to their bank. And that is a big game changer as far as farmers are concerned.
Hari, interesting what you're doing with the farmers, but moving beyond that from a business perspective, private labels, something that you have steadfastly focused right from the start. How significant it is, I think closer to 30% now, which is huge. How would you want to scale this up? Because from a business perspective also, it makes a lot more sense to be in control of quality, pricing, and also ensure that the unit economics are strong for the company.
Yeah, so private label is a big focus for us, right? So we are today about a little over 33% from a value contribution standpoint that our private labels contribute to. Our next focus is to move this 33 to about 40%, right? And that additional 7% will largely come from the FMCG side, right? Largely, because we pretty much done what we had to do on the on the staples organic and a whole lot of fruits and vegetables, etc. Now this 7% is going to come largely from FMCG, and we are going to keep increasing products that we launch there. Our strategy is threefold. First is, what are we doing in private label? So we will not have every product in a private label in every category, right? We will essentially fill gaps that we see in the market. So there are categories where there are gaps, we will fill them. Second is, we will create differentiating products. So for example, organic ghee, we will not do normal ghee. We will do organic ghee, organic honey. So we will differentiate in categories. Number two. Number three, if there is one category which has only one large leading player, we will be a good number second. So this is the strategy for our private labels. What does it do for us? It essentially gets our brand to consumers' homes at a price point which will be lower than similar products in that category. What it also does to us is that it gives us increased gross margins and hence helps our unit economics. So it's a complete win-win.
I've heard to gross margins being mentioned so many times, not only private labels, but how you drive business across. So that's interesting. That brings me to the question on profitability. Although, you did mention about the fact that by the end of this year, $1 billion, something that we haven't heard from an online grocery player, at least in terms of revenues, but breaking even in cities. How crucial is profitability, and does all of this sort of take you to a larger plan for an IPO in the coming years?
Extremely crucial, because from day one, Rahul, our focus has always been on profitable scale, because I think a lot of people say that when you embark on scale, it impacts profitability. If you focus on profitability, it impacts scale. We don't believe in it, right? We think that we should grow profitably. We are very clear about it, right? We will make certain investments in marketing, and you will keep that that balance will keep shifting here and there. But we've been clear about this from day one. This year, I think we are building a very efficient model, which actually gives us lots of unit economics, benefits around that. Our private labels will kick in where our gross margins start going up, right? Our average order values are going up. So we are doing multiple things to make sure that our last mile delivery costs start coming down drastically. So this year, by the end of this year, all our tier 1 cities would have broken even, right? All our tier 2 cities will start becoming operationally profitable, which means we'll cover for variable costs. If you cover for variable costs, then you're done, because then all you have to do is cover for fixed costs, which increased business will keep giving you, because fixed costs don't go up, right? So this is the focus this year.
In terms of competition, I know I've asked you this year on year, the likes of Amazon, Flipkart, now we have Reliance looking at this space, Dunzo, Swiggy. Everyone now wants a pie of grocery, because they now say it's the daily touch point and we want to be there. How does BigBasket view this? Do you see yourself continuing to be the market leader in the space, or with the shake-up, with Reliance also planning to enter, you want to see how the space will really pan out?
Rahul, I've seen some of the interviews we've done together earlier. My answer doesn't change one bit, actually, and because we believe in it, we really believe in it. We will continue to be the #1 player in the online grocery space, no doubt about it. Our stated goal is to become amongst the top 3 players in the overall grocery ecosystem, including physical stores, right? We are getting there. We will get there very soon, but leadership in the online grocery space, we will keep, hopefully, right? I think this market needs more players, and when more players come, the market starts expanding on its own, right? People make more noise, there's more advertising, lot more people hear about this online grocery piece. You will see lot more customers coming in, market will grow. It's a single biggest sized market from a retail perspective. Retail is a 900 billion trillion dollar business today. 60% is grocery, right? It's humongous. So 600-700 billion dollars, right? But 5% or 4-5% of that is modern trade, which itself is so large. There is no way one player can actually service this market.
Of course, it will be
so you need more players, markets will open up, and I think it will benefit everybody.
Top trends that Hari did talk about is BigBasket is of course on an expansion spree, new offerings, infra, and also ensuring that they push the button on the marketing really. But all of this really boils down to one, catering to the Indian sensibilities. Anything that the customer wants, BigBasket wants to ensure that they're there fulfilling that demand. Thanks again, Hari. Wonderful conversation.
Thanks,
Thank you. Thank you.
Well, that's BigBasket and its plans to become a unicorn. With that, we have to take another commercial break, but stay tuned. On the other side, we're going to get you two special stories on two celebrities, both from Bollywood. We'll be back in less than 2 minutes. Welcome back. You're watching Startup Central with me, Nayanthara Rai. This show, of course, dedicated to startups, technology, disruption, innovation, anything to do with the new economy. Quick reminder, folks, you can be in touch with us. You can send us an email, or you can even use Twitter to reach out to me with your ideas, maybe even your pitches, and be featured on Startup Central. Today, it's Friday, so usually we do talk about movie launches, right? But today we're going to talk about two Bollywood celebrities and how they're getting smart with startups. Let's begin with Deepika Padukone. Anything she touches is always photographed, whether it's her movies or when she's spotted at the airport. And of course, we've all ogled at those wedding pictures, haven't we? Well, Deepika Padukone is also a very smart entrepreneur. And she's got quite a few interesting investments in the startup universe. Here's that report.
Hi, मैं हूँ Deepika Padukone.
Deepika Padukone is the reigning queen of the 100 Crore Club, having delivered 7 movies that made hundreds of crores at the box office. Now this, coupled with a string of endorsements, makes her one of the most valued celebrity brands in India today. According to Forbes India's celebrity list for 2018, Deepika Padukone earned an estimated 112.8 crore rupees in 2018 compared to 59.45 crore in 2017. Now her better half, Ranveer Singh's projected income for 2018 was over 84 crore compared to 62.63 crores in 2017, making them one of Bollywood's most powerful couples. While she was paid 12 crore rupees for Padmavat, her average movie fee is around 10 crores, making her the highest paid female actor in Bollywood. She reportedly charges around 8 crores per endorsement, and she's the face of brands such as Axis Bank, Oppo, Tanishq and Nescafe. Deepika has been investing in startups in the health and fashion space in recent years. She owns a fashion label called All About You that sells on Myntra. She recently invested in yogurt brand Epigamia's parent, Drum Foods International, and has also invested earlier in the furniture rental company Furlenco and in Purple Beauty Store. Her investments include real estate and luxury cars. She owns an apartment in one of Mumbai's high-rises and bought another apartment here for her father years later at a market rate of 40 crore rupees. She owns 5 cars, including an Audi A8 that costs 1.2 crore, along with a Range Rover, a Mercedes-Benz G63, a BMW 5 Series and a Mini Cooper. One of India's highest paid actress, Deepika Padukone sure knows how to make each rupee count with her smart investment choices.
Now, you can't look like Deepika Padukone or let's say Hrithik Roshan unless you're really particular about your diet and fitness. Hrithik Roshan is of course known to be a fitness fiend. And therefore, it should come as no surprise that he's also making investments in the fitness space. Here's that report.
It's been nearly 2 decades since Hrithik Roshan made his debut on the silver screen. Hrithik is today one of India's richest actors and entrepreneurs, reportedly with a net worth of 2,600 crore rupees. He's also one of the highest paid actors in Bollywood, with a fee of 40 crore rupees per movie. Movie acumen aside, Hrithik also used his penchant for fitness to become an entrepreneur. Hrithik co-founded a lifestyle and fitness brand, HRX, with Afzal Zaidi, the founder of Exceed Entertainment, in 2012. HRX was exclusively licensed to Flipkart on Myntra in 2013. In 2016, Myntra bought a 51% stake in HRX. The fashion and lifestyle brand is aiming at revenues of 300 crore rupees in financial year 2019.
For the love of fit, get all of it on the CureFit app.
In 2017, Hrithik signed a 100 crore rupee deal with health and wellness startup CureFit. The 5-year deal includes the actor's stake in the company, with HRX Workout alone expected to clock annual revenue of 250 crore rupees in the coming years. Fashion and fitness aside, HRX also joined hands with Xiaomi in 2017 to make a special range of fitness bands for a royalty amount. When Hrithik is not acting or investing, he collects luxury cars. His collection includes a Rolls-Royce worth 7 crores, a Maserati Spider worth 2.1 crores, apart from others such as Range Rover, Porsche, Mercedes-Benz S-Class and a Maybach. Actor, investor, luxury car collector. It remains to be seen what Hrithik's next avatar.
Well, there you go. That's Hrithik Roshan, not just a Bollywood star, but the smart entrepreneur, and what he's doing to grow his money. With that, we're going to wrap this edition of Startup Central. Many thanks for tuning in. Do stay in touch with us. You can always email us or reach out to us on Twitter as well. My Twitter handle is Nayanthara Rai. Send us your feedback. Maybe you can even pitch to us to be featured on Startup Central. Have a good weekend.